Let's be honest, we all have it. That cash that's just kind of sitting there in a checking or savings account, not really doing much. But is it actually working for you? Today, we're going to dive into a really powerful but often overlooked tool that can put that idle cash to work without you having to take on big risks.
So really, think about it for a second. Where is your extra cash right now? Is it in a checking account? Maybe a savings account that's earning, practically nothing? For most of us, the options have always felt, well, a little limited, forcing us into a pretty frustrating choice.
And here it is, that classic trade-off. On one side, you've got demand deposits, like your checking account, where you have total flexibility. You can grab your money anytime. The catch? You earn next to nothing in interest. On the other side, you can lock your money away in a fixed-term deposit to get a better return, but then you lose all that flexibility. If you need it early, you're going to pay a penalty. It's a real headache. But what if there was a third option?
Well, that third option is the money market fund, or MMF for short. You can think of it as a kind of transit station for your money, designed to balance security and easy access in a way that those traditional bank accounts just can't.
So what is this thing exactly? Well, think of it like a mutual fund. Your money gets pooled together with a bunch of other investors. But here is the absolute key difference. Instead of buying volatile things like stocks, this fund invests only in very safe, very short-term debt.
Let's pop the hood and look at the actual ingredients inside an MMF, because this is what makes it so stable. We are talking about ultra-safe stuff here. You've got Treasury bills. Those are just short-term loans to the U.S. government. You've got CDs from major reliable banks. It also holds things like commercial paper, which is basically a short-term IOU from a big, financially solid company, and repurchase agreements, which are essentially overnight loans backed by government bonds. See the pattern? They're all high-quality IOUs that get paid back very, very quickly.
And that brings us to the most crucial point. The entire purpose of a money market fund is to preserve your capital. It is not about hitting home runs or chasing massive returns. It is all about keeping your money stable and secure. And that means it is not a tool for long-term growth. You wouldn't use this to save for retirement 30 years from now. Its job is safety, not aggressive wealth building.
Okay, so why should you consider an MMF? It really boils down to three core advantages that directly solve that classic cash dilemma we talked about at the beginning.
First and foremost, these are considered one of the lowest risk investment vehicles you can find, period. It is all about preserving your capital.
So why is it so safe? Well, it goes right back to what the fund holds, those high-quality ingredients we just saw. Because it's packed with debt from top-tier institutions, the chance that any of them will fail to pay it back is incredibly small. This is exactly why, during periods of stock market chaos, you'll often see savvy investors move cash into MMFs. It's a safe haven to wait out the storm.
All right, let's move to the second advantage. And this one is huge: liquidity. That's just a fancy word for how quickly and easily you can get your cash back when you need it.
MMFs typically operate on what's called a T+1 settlement. The T just stands for the day you make the transaction. All this means is, if you sell your shares in the fund today, the cash is usually back in your account by the very next business day. There are no lock-in periods, no penalties for pulling your money out. It is your cash, ready when you are.
And finally, the third key advantage. On top of all that safety and flexibility, you typically earn a much better return than you would in a standard savings account. I mean, the difference can be pretty shocking. Just look at the typical yield of a savings account versus a money market fund. An MMF's yield tends to follow the prevailing interest rates in the market much more closely. So when rates in the economy go up, the return on your MMF tends to climb right along with them, helping your cash actually keep up with inflation in a way a savings account often can't.
And there's a little bit of magic at work here too: automatic compounding. The earnings you make from the fund are automatically used to buy more shares of the fund. Then, those new, tiny shares start generating their own earnings. It creates this awesome snowball effect that puts every single cent of your money to work for you 24/7.
So when you put it all together, the low risk, the high liquidity, and the better returns, you get what the source material calls the ideal financial safe harbor. It's just a place for your money to rest safely while you figure out its next move.
And look, this isn't just a tool for professional traders. It's perfect for your emergency fund. It's perfect for that down payment you're saving up for a house, or maybe for cash you plan to put in the stock market, but you're just waiting for the right moment. Really, it's for any cash that needs to be both safe and accessible.
You know, our source material just sums it up perfectly with this quote: "An MMF isn't designed to make you wealthy overnight. Its real purpose is to give your money a secure and flexible home that provides a little bit of growth along the way."
So the most important thing to take away is this. A money market fund acts as the liquidity defense line for your entire portfolio. It's the stable, reliable part of your strategy that gives you the freedom and security to make other, bolder investment decisions.
And that leaves us with one final question for you to think about. Take a look at your own finances. Does your portfolio have a solid liquidity defense? If not, a money market fund might be exactly the tool you've been looking for. Thanks for tuning in,